Good morning, everybody. How's everyone doing today? Testing, testing. All right, you guys can hear me? All two of you? So everyone's starting to file in. I accidentally hit the wrong button. John, I might have messed up one of the other scheduled days. I'm going to have to check that out. All right. Hi, Miles. Hi, Arizona Bob. About 15 seconds. We got to keep our eye on our soybeans chart and Dow Mini. Good morning, everyone. Starting to file in. All right, markets are now open. Wow, soybeans really jumped through the gate there. Markets are up pretty strong. Dow Mini's up 180 points. All right, got a short on the YM. Heads up if it comes back up, 32,922. 32,922, targeting 896, 882. Stops at 956. Got to get through that 50 moving average. This is a market that's trending higher, so let's see if it's going to retrace at all or keep pushing upwards. Short on soybeans as well. If it comes back down, I would get in at 14, 12 and a quarter. Let's get below that spike. Well, did it get there? Yes, it did. So soybeans is short. Soybeans short. Targeting 1406 and a half. Already hit it. So moving quick. Unfortunately, the YM now with a long trade, 956. Let's make it push through. 956. It got to 955. The stop was at 956, so that'll be a stop and reverse. Otherwise, stay short. If it does reverse to long, the short will be, the stop will be 913, and it did. It just got long. Targeting 977, 993. Money management is at 974, right up in here. It's got to get challenging this resistance up here. We'll see if it could push through. Meanwhile, soybeans is pushed lower, and the stop has moved down to 1407.5. So let's see if this rally, well, there's soybeans finishing. That was a real fast one. Let's see if the YM now can make a new swing high here. And it did. Move your stops to break even. Pushing up on target 2, which is at 32,993. The stop just moved higher. 954 is the stop. Ticks. Unfortunate short trade, that first trade of the morning. This market wants to go up. Is anyone able to grab any of these? You grab the soybeans or This YM setup here. Stop just moved higher, 958. Not quite able to get up to target 2 yet. Did just stop out at 958. Kind of need one more trade for power of quitting. If you got that short, still a little bit behind schedule. And soybeans winning, so I don't think we should go for anything else. One and done on that one. So another short on the YM. That one went in pretty quick. Short at 959. Comes back down. This market might just be wanting to go up today, and there it is, getting long again. So I think that short went pretty quick there. But anyway, if you're trading another trade, you should be long. Long from, say, 81. Targeting 996. Just hit it. And then stopping out at break even. Pretty quick moving. Now the failure to get higher could lead to a strong move lower. If we get one of those. There's a short again. Call it 949. And the stop's at 33,001. Take a bigger look at this. It's been trending up all day. You can see the energy going higher, higher, higher is starting to slow down. Now you have a short trade, 32,949. And 33, let's see, the target is 32,910 and then 32,889. And it did just trigger short. Breaking through the 50 moving average. Money management is at 914. These are the kind of trades I like. Almost at money management. And there it is, hitting money management. Move your stops to break even. And there's a full target. Is that a full target? 910. I got to 911. Missed by one tick. Let's see if it could push lower. That 200 moving average could be in sight here. There, yeah, still missed by one tick. Should move your stops to break even. Did I kill Thursday, John? Yeah, I probably did. Redo it. So these are the kind of setups that I live for, really. You got these legs going up, strong legs, and weaker, new highs being made with no follow through, and then your short setup. Compare that one with the earlier shorts. You can see the difference. Anyway, the stop did move lower, and this market still may have upside to it. It missed its full target by one tick. But the general idea is the same. You've got that high swing level here and the breakout just above it. The lack of follow through and then the short setup will often be your money trade. The failure to follow through, we've seen it over and over, could lead to a strong move in the opposite direction. However, the exception to that is when you just have a strong trend day, and this might be that. Who knows? They happen sometimes. Of course, if you're in a strong trend, reversing trades just are not going to work. Anyway, not an easy session on the YM, for sure, to start. Soybeans, on the other hand, is pretty darn easy. One trade, full winners, even more winners if you missed the first one, but there was time to execute on that. Plenty of time. Crude oil, I usually like Monday mornings on crude oil. It was a little tough this morning. First trade, the yellow trade went way too fast. The green trade was a losing trade, so the first trade of the morning, not getting it done. I mean, the blue trade here. So that one lost. And the second one, too. The second one was a trade off of your blue line here. Nothing wrong with that trade other than it just didn't go far enough. So it had literally a full loss, but then this one was a partial loss, maybe like a 50%er, give or take, and it got long, and then that one came up. There was a risk of getting short again, but with our key level adjustments, that entry would be at 5.9, right? So you go 6.3, you adjust it 2 ticks to 6.1, and then you work around the key level, 5.9. So it would have stayed long, and it went through and hit all its targets. So that one lost 32 cents, and then this one lost roughly, 15 or somewhere in there, maybe a little less, maybe a little more. Then it came up and hit all its targets here, and then some. And then if you need one more trade, you got the short, and that one came down and hit all its targets too. So hopefully that worked out if you guys are trading crude oil. Then, it's just kind of winners and losers. One thing I want to point out, and this is a good sign, I think, but look at the price. We're in the 80s now with crude. The 80s. Considerably down from 100 and above. Below 90 now. So in the 80s. Hopefully it goes lower. Lower, lower, lower. We all want lower. Unleaded, also a little tricky because there were a lot of fast setups and you just had to be patient. So the first one at 9, I mean, literally, it's just flying out the chute before anyone can grab it. And then the next several trades were like that. All these, really, if you look at the timestamp on it, you had like a second or 2 or 3 to execute on. So too fast. This one here, you had a chance to grab it. Let's see. Well, it came back up. And then you got to make your stop and reverse adjustments. Like I will literally go as many as 10 ticks sometimes with this market because of the spread and because of the size of the tick. And in this case, you're working around your 2 lines, I think. So it's just a matter of how you handle this. But, you want to get down to like 64, a couple ticks below that 50 moving average because 1 tick below is only 65. And so from 73 down to 64 to stay long makes all the difference. Otherwise, you miss the move. And if you do, then this is the trade that actually is the one where you have time to execute on again. And that would have been a nice one. So, tricky. Got to be stoic with your rules, know what they are, know how to do it, well practiced. Unleaded gas, not for the faint of heart, but it could be very rewarding. Very thin market, a lot thinner than we've seen at this time. Not even 10,000 contracts traded, so not the easiest market to trade. That's for sure. Unleaded gas does take practice. Let me know if you guys have any questions. So the Dowie Mini, after missing that target by one tick, getting long and hitting all four targets. It's just a question of how many trades you want to put on. Look at some Russell setups here. Yeah, I don't know. That one looks like it might have went in a little too fast there on that green trade. Oftentimes when you just see it stab down and up, there's no time to grab it. But it was that one obviously a losing trade if you were to grab it. It looks to me like still looking for that first trade. That's with Spotlight. That's not really the chart I was looking for. Let's see the 377 tick. .377 tick looks more active than the range bar. Right at the open here, looks like you may have been able to grab it. I don't know. 1395.6. It does stab back down to 1395.8. Maybe that one went a little too quick, but then you have the next one. If you're using the add-on trade, and you can see that one stabbed up to a perfect target 2. And there was enough time to grab it as well. And then there was this one, and that one also perfect target 2. Although it looks like actually it would have stopped out at break even because it hit target 1 and pulled back down. So that's how the 377 tick went. Definitely the winning opportunities were in there, whether you were able to execute on the purple trade or the green trade. With counterpunch. Again, guys, if you have any questions about any of this, I know I'm going through it pretty quick. I never know what to cover. I never know if you guys want me to look at counterpunch or catapult or spotlight or this market or that market. So I'm just kind of running through all the opportunities. Got so many. We didn't look at the micro crude oil, which really was different than the full contract. Did not play out the same as what I just walked you through a moment ago. You don't have the same trades. You got this yellow one that just was way too fast. There's no way to grab it, luckily. You have two partial losses with the long and then the short. Not quite able to get to full money management on that short, unfortunately, but the losses were cut in half on both. So it's like those two losing trades are really like one losing trade. And that's the good thing about stop and reversals, especially when you're reversing into this, right? So you have 2 partial losses and a big full winner, depending on how many contracts and what targets you're going for. Just totally different. Another loss, partial loss, and another strong winner again. So clearly not the easiest. There's another winner, perfect target too. Enough trades in there, hopefully, to make it happen. Definitely some losers in there sprinkled in with some winners, but it looks to me like the opportunity for power of quitting existed. I don't know if anyone traded that or not. John, were you trading that one? Let me know how you did. I'm curious. Definitely takes some being on your toes, dexterity, and some well-practiced execution to be able to get this work done quick. But that's part of the deal, right? You get really good at it, and then you're able to typically finish. Might take more than one trade sometimes, but typically you could finish and then be done like less than 30 minutes, sometimes less than 10 minutes. Down slightly. Yeah, you have the 3 trade. Yeah, so it's not terrible. Down slightly. That's, par for the course. You're not going to win 100%. We all know that. So down slightly is how you control your drawdowns with minimal and efficient trading. So good job. Because really your job is to execute your trade plan. It's not to worry about whether a trade wins or loses. They're going to do what they do. Some will win, some will lose. You just win more than you lose. That's the secret, obviously. And look at the 610 tick with counterpunch. This, of course, using trend mode because you only go long when the line is blue and only short when the line is red. And this one here, can't get more perfect than that target too. Went right to it. One and done and stopped out. One and done was just what the doctor ordered. Because otherwise you'd have to be in the 3rd trade because the second one lost. And this market wants to go higher. So far, it's looking like a trend day up. We'll see how long that lasts throughout the session. And now for a completely different look and feel, Catapult Trader with the custom Renko. Lots of movement. What a different looking chart. Waiting our 4 minutes. Got to get through a lot of bars just to get to 4 minutes. Look at these trades. They look like they've been flung from a catapult. So here is our 4-minute mark. After some strong movement, this one is going to lose. This one is going to break even. And then the third one is also going to break even. This one went too fast. Yeah, it gets pretty dicey. It's tough. These trades are tough. Depending on how many trades. Look at that target one. How much larger that is. And then you finally, 4 minutes in, really 8 minutes into the session, that's the catapult trade there. Gets to its, see that maximum excursion target, that pink target there? That's a fixed target that I use the automation to kind of determine the odds of the maximum excursion. So if you're trailing up, you can use that target to exit everything. So instead of exiting down here at the trailer, you exit up here because the odds are that's when it's going to pull back. So interesting way to use it. Here's another one. And look at, see, there's your maximum excursion again. And then it pulls back again. So it's an interesting use of this tool, this fixed target. Instead of, you use it as a way to kind of figure out where the runner is likely to finish. And instead of waiting it to pull all the way back to the trailing stop, you just exit at that maximum excursion target. And it's quite a difference if you think about it. Same with this one. So you got lots of strong moves, and then you get consolidations, and then strong moves, and then consolidations. All the consolidations seem to be letting the market catch its breath, like the short trades, the down trades don't seem to have the energy, as you can tell. So far today, it's an up day, and it could be a trend day up. And for whatever reason, looking at counterpunch on the SPY, on the SPY daily, it got a little toppy. Well, let me back up a little. Toppy's the wrong word. I meant the opposite. Toppy but reflect. But God, I could talk. The opposite. Bottomly. Anyway, let me just show you. This is a great market to trade with counterpunch as a swing trade. I have the exhaustion dots turned off on this chart. You can turn them on. But right in here, usually when you're around a top or a bottom, you're going to get some dicey trades, right? Because it's testing the lows, but it's unable to break through, and you end up with some up and down. And that's oftentimes where you might see a few losing trades. Like this one here. I mean, usually if I get 90% to a good sized target one, I'm going to exercise some money management, protect my position, just barely missing on a real good sized target there. The short trade gapped through the entry, so no way to grab it. So the dicey comes with your number 2 and your number 3, because what you got here is the forming of a 1, 2, 3 bottom, and maybe even a head and shoulders, the inverse of a head and shoulders, right? Because you've got a left shoulder possibly here. You got a head here, in this area, down at the low. And then you have a possible right shoulder here. And so you get caught up in that, and there could be some losing trades, obviously, because the neckline, what looks like a nice long trade, messes you up when it comes back down to put in that second or that right shoulder to test the lows. And of course that fails. I mean, it could have got down to target one. It didn't. But look at this trade. If you apply this with just good old-fashioned technical analysis, a 1, 2, 3 bottom, which you have at the head and the right shoulder, and whether this is a head and shoulders or not, that's definitely a 1, 2, 3 bottom. So either way, you got, like, depending on how you're interpreting this pattern, you have that neckline, or at the 2 point right here. And look at the entry on counterpunch. It couldn't have been written any better. It's right above it. That's where the stars are just all aligned. So you want to let the price charts speak to you. You can see it all. It's all there. And it just did hit. Well, it's pushing up on target 3. Just hit it, actually. Let's see. Did it hit it? 417.53. 417.62. It went 9 cents over target 3 this morning. Right there. So if you're trading this, and this is a really good swing trade, if you're interested in the SPY using counterpunch, it's a good idea. There's different ways to use counterpunch on this, but this is just looking at this particular chart here. We could look at the inputs. But I mean, you got a $10 target 1, a $17 target 2, a $23 per share target 3, and you just go with a simple call option, something below 394, maybe 393, slightly in the money. Don't overthink it. And, several months into the future, so you have time on your side. And then you're going to get double and possibly triple percentage returns on that trade. And if you lose, say it comes back down again and stops out, you sell your option back. You'll lose some premium, but you also recover some also. Really good way to go. Great way to use counterpunch. Anyway, there's that. What else? Any questions, you guys? Pound Aussie. What's going on with the Pound Aussie? Look at this one this morning. Well, you got a short trade here. It's, you get in sync with it, and that one's going to flip to long. So Pound Aussie, not doing a lot, but in its second trade, first trade, losing a little. I mean, the stop's way up here, so unfortunately it flips to long. But the failure to get lower, is it done testing down here? I don't know. But oftentimes these green trades will come in and you'll see a retest and then support holding and then it moves up. A lot of times the biggest green trades put you under pressure for a bit before they take off. Now, there was an attempt to get long on that green trade and it wasn't done going lower, and it ultimately tested these lows, came down a little with no follow through. Is this a bottom forming in here? Short-term bottom? Time will tell. That green trade could still work out, is the point. But that is the trade at this point in time. Long from 73.52, and it's targeting 67, 75, 84, 93. The stop is all the way down at 73.29. So make a 1 pip adjust off that 30 level. So we'll see how that one works out later, I guess. It's going pretty slow. If you guys wouldn't mind hitting the like button for me, I'd appreciate it. Give me a thumbs up if you don't mind. Now, other than that, guys, this is your chance to ask questions. All right, let's look at that. The 10 a.m. session, the mini session. And a long trade that was too quick. Now you got a short trade. 89.19, targeting 89.05, and the stop is at 89.41. Everyone's trading that 10 a.m. mini session. You got money management down at 41. You're going to have to, not 41, 89.07. It's one tick lower than that 50 moving average. See if it can punch through. Again, the failure to get higher here, guys. Notice the energy to get up. And there it is. It just hit its target. 14 ticks. Move your stop to break even. 10 a.m. mini session. One and done once this trade is over. Stop should now move to 89.18. And there it is. Just like that. 14-cent trade. $140 a contract. In what? A minute? Less than a minute. So that one's done. It's all about the trade plan. all about the trade plan. All right, guys. I think I'm done. You guys are all sleepy, or you don't have any questions, which is great. It means I've been doing my job well. And I think I'm going to let you guys go. Don't forget, John will be here tomorrow. I'll be back on Wednesday. John will be Thursday again. And if you didn't catch the free training on Saturday in 2 weeks' time on the 20th, we've got our trade plan hacking live 4-hour masterclass. That's coming up Saturday, August 20th. All right, everyone, have a wonderful day. See you next time.